Hey there, everybody. Welcome back, 2025. This is shaping up to be an exciting and interesting year, no matter what your political leanings or what your views towards cannabis. Just a lot going on. We are in the final late stage of the rescheduling, and that also affects this, what we're talking about today, the IRS's latest warning. So I'm just going to post. I'm going to post this right this second. Here's the very latest, came out, I believe, today or yesterday. So the hearings are supposed to start, gosh, I believe in the next 7 days. Um, a group, there's different groups trying to stop the hearings from happening at all. The judge orders the DEA to respond to new allegations. And by the way, this is very confusing. So the DEA, they actually signed off on the move to Schedule 3. But some people at the DEA do not like the move to Schedule 3. And at the December 2nd hearing, again, this is the final hearing with one judge only, the DEA, the very first question the judge asked them, the DEA attorney stood up there and he just said, let's cut to the chase. Are you going to be arguing for the move to Schedule 3 or against it? And the DEA lawyer said, we're arguing for it. Well, now there's allegations that maybe there's some trickery going on, and DEA, in a tricky way, is pretending that they're going to be arguing for it when they're actually going to be arguing to not move it to Schedule 3. So, man, this will be a great movie, by the way. These hearings are going to be live. So now the judge has ordered the DEA to, they've got till January 13th, which is 4 days from now. It's Monday, to respond to these allegations. We'll see what happens, but there's going to be all kinds of fireworks either way. In the meantime, cannabis is not on Schedule 3, certainly for 2024. If it does move to Schedule 3 in 2025, March, summer, fall, and the next question everyone will have, what's the date this takes effect for tax? Because remember, 280E only applies for drugs on Schedule 1 or 2. And so 280E will go away for all cannabis companies. It'll make their net income shoot up overnight. It'll make their cash flow shoot up overnight. It'll make their tax bill decrease overnight. And it'll also make their company valuations shoot up overnight. So it's big news for the industry. People will be proposing that goes in effect January 1, but who knows? It could go in effect the day they issue it. It could go in effect a different date. We don't know. But in the meantime, I can just guarantee you it's not going to apply to 2024 or prior, even if there are lawsuits. So we'll see what happens. In the meantime, we got to help our companies. So what are some companies doing? So there's definitely attorneys and CPAs out there that are extremely aggressive and suggesting their clients do aggressive things. That's not the way I operate. I operate as most CPAs with professional skepticism. I like to be conservative. I don't want to put my clients in risky positions because I'm conservative and I think it all the way through. Does my client want to get audited by the IRS? No. Do they want to defend a lawsuit against the IRS? Do they want to pay penalties? Do they want to pay interest? And by the way, if I guide my client, whether I'm an attorney or a CPA, to do something a little bit questionable, and the IRS shows up 3 years later and says, oh man, you blew it. You can't do 471C or just file a refund or whatever it was, about 8275. And guess who's going to deal with the pain of that, dealing with the audit? And not only the pain, the cost for defending legal work, discovery, court cases, all that, penalties, interest. The client, that attorney or CPA who recommended that strategy to you, and by the way, they're all going to say this, and I've heard a couple of them on their webinars. Oh, disclaimer, and they make a very small and minor. If I'm wrong, I'm giving you this great ideas to maybe save you a lot of tax money. But if I'm wrong, don't come looking to me to help you later defend yourself. Unless, well, of course you can come to me to defend you. By the way, my rates are $700-800 an hour, and I'm going to clean up right now with my giving you this aggressive strategy, and I'm going to clean up later when you go to court. So again, this is my position. I'm conservative. I bounce my ideas off whenever I have an idea or a thought, or I read different viewpoints. Who do I go to? Two people right away. I'll mention them by name. Jen Benda and Rachel Gillette at Holland Hart. I think they're excellent tax attorneys. They're also a little bit conservative. They also lead the AICPA Cannabis Committee every year. Um, I get their take. I also get the AICPA Cannabis Committee, many senior partners at national law firms, their take. And I'll tell you, all their take from 471C to refund claims right now is buyer beware, highly questionable, taking a huge risk. And, I'm going to go with them for now. And so, and by the way, what does backs this up? The IRS issued this, December 23rd. So not 2, 3 weeks ago. I'm going to toss this link in so you can read it yourself. It's very short. And if you even want to cut the shortness of it, just jump right to the bottom. Proper use of 8275 disclosure statement. So if you take a protective refund claim or you file a refund and you want to disclose why you're doing it in your reasonable basis, which is also defined under the code. So what has happened the last year or two, starting with TrueLeave, there's been many companies flat out filing refund claims, and many of them stating 280 doesn't apply. The HHS department, the DEA, the FDA, they all say cannabis is real medicine, doesn't belong on Schedule 1. So regardless, the cannabis is still on Schedule 3 and it hadn't been finalized. They're basically stating, hey, let's just file a refund and hope for the best. And again, I'm not suggesting that for my clients. If I own a dispensary, I'm not doing that. I might file a protective refund claim, way less risk in that. But filing a flat out refund, first off, you're painting a target on your back. Hey, IRS, here I am. Come after me. Better check with your investors. If you have any kind of flow through entity, and you file a deal and the IRS comes to your entity, they can start auditing your investors. And I can guarantee you your investors are not going to be happy about that. So be very careful on that front. If you're a C Corp, you can keep any audit in the C Corp, but still IRS audits are a nightmare even if you win. And they cost you a ton of money even if you win. You're going to have your CPA attorney defending you if they come back and have no change, they agree with you. So if you read some of this language down here, I'll just read it to you and I'll just put in this little clause. Let's just read this together. Here's a clause from this thing. I'm tossing that in. Some disclosures received with respect to 280E, which disallows all deductions or credits for any amount paid or incurred in carrying on a trade or business that consists of illegal trafficking in a Schedule 1 or 2 controlled substance, This applies to businesses that sell marijuana, even if they operate in states that have legalized the sale of marijuana. Section 280E does not prohibit a participant in the marijuana industry from reducing its gross receipts by its properly calculated cost of goods sold. Another warning right there. Properly recorded. This is a whole separate talk. First off, if your accounting records and books are a shambles like many are in this industry, any tax position you file is going to be suspect. If you want to utilize 47111, you better be doing GAAP level cost accounting to take advantage of that. Now let's go to the next bullet point. A review of Form 8275 filings has revealed that some taxpayers have taken the position of disregarding Section 280E using a variety of rationales that do not constitute a reasonable basis. So that is the warning shot from the IRS. And they're saying flat out, not just one rationale, they're saying they've seen a whole wide variety. And they're saying all these varieties they've seen do not constitute a reasonable basis, which is a requirement for Form 8275. So they're just saying flat out, sorry, everybody, you better want to rethink this. Again, maybe things will change under the new administration, but as of now, I'm being more conservative with my clients. I want to correctly minimize taxes under IRS. I get it. It's a totally punitive tax. It needs to go away. I think we're very, very close. And that's the other thing. I think if these hearings get launched next week, I think it's going through. I think this one judge is not going to go against the HHS, the DEA, the FDA, the DOJ, and all their findings and say, oh, you know what? I think me, myself, and we're going to block this. So I think it's highly likely Schedule 3 is going to go through. We're going to get that relief. So don't blow it by filing a bunch of refunds and putting yourself at massive risk of penalties and interest. That's my opinion. Everyone's entitled to their own opinion. That's what I would do. Now, would I be filing protective refund claims for dispensaries based on these hearings? Yes. And I would be getting a good tax attorney, like I already mentioned, to help with those, to make sure they're done right, to make sure the Form 8275 was done right. And I will be very, very careful with those. And so that's how I do it. Now, if I'm a farm or manufacturer or processing plant, I'm going to utilize 47111. We can greatly reduce tax burden by doing correct gap level cost accounting. Most of the industry still is not doing that. And I say this isn't tricky tax positions that are going to lose. This is just what's already allowed. Let's do it correctly. If you are a farmer, dispenser, or manufacturer, processing plant, get in touch with us. If you're a CPA or accountant and want to learn how to do this stuff correctly, and come join our dope CFO program. We lead the nation in cannabis accounting, tax, and CFO services. Nobody's doing what we're doing or going as deep as we are with our clients. Our community of hundreds of CPAs, attorneys, enrolled agents, and bookkeepers in every state in the U.S. There is no other national accounting firm or law firm or anywhere near those numbers in our space dedicated only to cannabis. So I'm pretty confident when I say we lead the U.S. Not only that, we teach for the AICPA, many state societies. We've taught national accounting firms and hundreds and hundreds of CPAs. So we're pretty confident in what we're doing. I think that's mainly what I'm going to hit. But again, this is my position. That's what I teach. Every client can do what they want at the end of the day, but I just like to make them aware of those risks, what they're doing now. So anyway, that's my position. I would just, as a caveat, say anyone following anything Trulieve does from accounting, tax, or CFO perspective, buyer beware. Those people have had the shadiest past. They've been through about 20 CFOs. They've had criminal accusations against CFOs. They've had CFOs, like, for example, the CFO from Jackson Box, an actual very prominent CFO. He lasted all of 7 days and he said, I'm out of here. After he looked into the hood, I just, I read behind the lines. This is a really rock solid CFO star. They've had a lot of trouble, and then they're just filing $100 million refund claim. I'm extremely skeptical of that. But anyway, that's all my thoughts for today. We will see you next week, and have a great week.